SpaceX now allows public investment. Should you participate? For years, SpaceX was one of the most sought-after private companies in the world. Previously, individual investors could only observe SpaceX's rocket launches. They could access Starlink services. They could appreciate Elon Musk's vision. However, owning shares in the company was not easily accessible. This situation has now changed. In a highly anticipated event, SpaceX has gone public, raising approximately $75 billion and reaching a valuation near $2 trillion. This IPO set a record as the largest public offering to date, drawing significant interest from both institutional and retail investors. Shares rose sharply after trading began, generating widespread enthusiasm in financial markets. Many investors view this as a rare, potentially once-in-a-generation opportunity. However, historical trends offer an important lesson. The most exciting investments are not always the most prudent choices. This article will examine SpaceX's business, the reasons for investor enthusiasm, and whether individual investors should consider purchasing the stock or proceed with caution. Why investors are eager to invest in SpaceX. Consider the opportunity to invest in Amazon before online shopping became widespread, or in Apple before the launch of the iPhone, or in Google before its search engine became dominant. Many investors view SpaceX as a similar investment opportunity. The company has transformed the economics of space travel. It launches rockets more frequently than any other launch provider. Its reusable rocket technology has significantly reduced launch costs. Through Starlink, SpaceX has established one of the world's largest satellite internet networks. However, investors are not only investing in rockets, they are investing in a broader vision. A vision that includes satellite communications, artificial intelligence, defense contracts, global internet infrastructure, and eventually Mars. This combination has generated significant enthusiasm among investors. Reportedly, demand for the IPO far exceeded the available shares, resulting in many investors receiving only a portion of their requested allocation. When demand reaches such levels, a typical outcome follows. Prices rise. This is precisely what occurred. The case for buying SpaceX. We will begin with the bullish argument. Optimistic investors identify several significant advantages. First, SpaceX has a technological lead. The company has spent decades developing capabilities that competitors find difficult to match. Second, Starlink now operates as a global communications network. Each new subscriber contributes to recurring revenue. Unlike rocket launches, subscription-based businesses can generate predictable cash flow. Third, SpaceX is positioned at the intersection of several major trends. These include artificial intelligence, national security, satellite communications, space exploration, and advanced manufacturing. Many investors believe these industries could experience significant growth in the coming decades. If SpaceX emerges as a dominant player across multiple sectors, its current valuation may ultimately prove justified. This summarizes the bullish case. It is clear why many investors find this argument compelling. The problem nobody wants to discuss. Let us consider the alternative perspective. When investors become highly enthusiastic about a company, they may overlook potential risks. The company may be exceptional, but the stock can still be a poor investment if the price becomes too high. For example, SpaceX entered public markets with a valuation above $1 trillion, which quickly surpassed $2 trillion after trading commenced. This suggests investors are already pricing in exceptional future growth. This presents a significant challenge. Future success may already be incorporated into the current stock price. Investors often overlook this lesson. An excellent business does not necessarily make for an excellent investment. Price matters, valuation matters, expectations matter. Many investors experienced this during the dot-com bubble. They acquired shares in outstanding companies. However, the high purchase prices meant it took years to recover their investments. The company was successful. The investment was not. The danger. Another factor influences investor behavior. This is the fear of missing out. Investors see headlines, watch rocket launches, follow Elon Musk's activities, and hear friends discuss sudden wealth. And suddenly they feel pressure to buy immediately. However, the stock market often challenges impatient investors. History shows that many high-profile IPOs experience significant volatility after their debut. Some soar, some collapse, many do both. Analysts note that major technology IPOs frequently experience significant declines in their first year, despite strong initial enthusiasm. The primary risk is not that SpaceX will fail. The danger is that expectations become unrealistic, a common mistake among inexperienced investors. If I were starting today, I would avoid asking just one question: will SpaceX succeed? Instead, I would focus on a different question. How much of my portfolio should depend on SpaceX succeeding? This approach reflects a fundamentally different mindset. Many investors concentrate on identifying the next high-performing stock. Successful investors, however, prioritize effective risk management. The reality is straightforward. SpaceX could become one of the greatest companies in history, yet its stock price could still experience significant volatility. No one can predict this outcome with certainty, not even industry experts, nor professionals on Wall Street, nor television commentators, and certainly not social media influencers. The future always remains uncertain. This is the reason diversification is essential. A diversified investor can benefit from SpaceX's success without risking financial loss if expectations are overly optimistic. The bigger lesson: the real story is not SpaceX. The real story is access. For decades, many of the world's top-performing companies remain private, leaving ordinary investors without access. Today, millions of retail investors can access opportunities that were once limited to venture capital firms, institutions, and wealthy individuals. This shift is significant. However, access alone does not guarantee success. Successful investing has never depended on finding a single exceptional stock. It has always required discipline, patience, risk management, and emotional control. These principles apply whether you invest in SpaceX, Apple, Nvidia, or an index fund. The company changes. The principles do not. Conclusion: SpaceX has the potential to influence the future of technology. It could also impact the future of communication. SpaceX may further advance humanity's presence in space. However, as investors, our role is not to be swayed by compelling narratives. We must assess opportunities with objectivity. SpaceX could become an extraordinary success. Alternatively, it could disappoint those who expect rapid results. The future remains unwritten. This is why prudent investors remain humble. In investing, certainty often comes at a high cost. Humility, on the other hand, can be rewarding. If you found this video valuable, consider subscribing to the Illiterate Investor. Building wealth is not about predicting the future. It is about preparing for it.